First of all, like I mentioned, it's great to always get a fund manager as opposed to an analyst. Give us a sense of how you're reading the markets today in Nigeria.
Right now, as you know, that there are not so many asset classes outside the fixed income, money market, and near cash investments and equities, which is exactly what is going on. What we have continually seen is the returns in fixed income. It's bringing positive real return. And on the equity market, it's not quite so at the moment. Maybe probably till we start seeing some more exciting news, as we expect to see at the bottom of this month, more banks coming up with results. Right. And that would then dovetail to what we see as a future for the returns from fixed income as well. But at the moment, fixed income is what is catching most interest.
It's the big thing right now at the moment. But before we talk about the catalyst for the markets, give me a sense of how difficult it is to invest in this environment. You just mentioned you don't have many choices in terms of asset classes where you can put the money. Really, equities and fixed income to a large extent. To some extent, you can get into real estate. Give us a sense of how tough it is for you to invest in this market as a fund manager.
Well, they are on these two sides, on the side of a fund manager and from the side of the investor as well. Knowing fully well that investment is just a function of your disposable income. So you're talking about how well off the average avid investor will be. Now, just as you know as well, in terms of the fundamentals of trying to read the markets in a more systemic and scientific way, they are depending on the results and the numbers you have. That's on the one side of it. Then actually establishing a trend to give like a technical flow is another side of it. What we've continually seen, starting from like 3-4 years ago and tracing it out to 2 years ago, there was like a dearth of investor confidence in the markets, but that's since slightly improved. We've seen a bolder regulatory stand, which has given more of us more confidence in the markets and being able to just deploy assets, as when we should feel.
Okay, so coming back to the markets now, what are the catalysts that you see going forward? Everybody's talking about bank results. We've seen any bank release numbers. It hasn't really moved the stock price that much. Give us your thoughts on what you think is going to get this market going.
Well, for equity investments in the first place, one of the main bane for it is the returns from alternative investments, that's fixed income primarily. And even now, you could just see even for cash or near cash investments, like the bank deposits and all of that, a 90-day T-bill will just definitely drown any bank deposit interest rates at the moment. They're talking about having 90-day money at 14.8 or thereabout, and longer tenor of like 180 at 15.5 and above. And banks are doing maybe maximum of 12.
So does that mean you're not really focused on equities?
Because as a fund manager, what you're chasing is the yield, it's the returns you deliver to your investors. So it's you chasing the yield wherever it is, but you have to balance that with the objective of your investor. Know exactly, so it's not you're just chasing yield and not matching it with the expectation.
But hang on, isn't the traditional argument that equities over the long term outperform? So you should be having exposure there too.
Well, that would depend on how you're being benchmarked. In playing in the Nigerian industry, a lot of asset management thing, which ordinarily should have been like a 1.5 year beyond kind of investment or horizon. Given in this financial space, you're being benchmarked against 1 year indices anyway, which drive you to deliver at that time. And like I mentioned earlier about investor confidence, 10 years ago, a lot of us didn't see, 10, 20 years ago, a lot of us didn't see in terms of bond markets, even having confidence enough just to stake out money for 20 years in the economy. But now that has since changed. That is fast changing, and that's fast impacting how we're dealing with investments on the fund manager side and on the investor side of the fence as well.